What is up, ATG traders? This is Munya and welcome back to my trading channel. Today I want to share with you guys a very powerful forex trading strategy that you can use and actually make money from, right? So it's been a while since I shared a mobile strategy, but today I want to share with you guys a strategy that you can try out first on your demo accounts and then switch to real accounts once you're satisfied that it works. I'll also show you the results for this strategy, and that I've already also tried it out and tested it, right? But before you do that, make sure you're subscribed to this channel and make sure you turn on the notification bell so that you're notified of any other new post I make to this YouTube channel. And if you really enjoy this channel and want to support it, make sure you click the like button, right? Don't forget to do that. Okay, before I start off on this strategy, I want to show you some entries that you end up finding if you start using this strategy, and just to show you guys that it really works. So here are some of the entries that you get once you start using this strategy. As you can see, you get some nice perfect entries. If you can maximize on those, you make quite a lot for yourself, right? So let's get into how to install this strategy and how to use it. So we're going to talk about entry points, we're going to talk about stop loss, we're going to talk about take profit levels again, and we're going to talk about how to manipulate this strategy and which time frames you should use this strategy from, and quite a lot about this strategy, right? You can also comment down below what you think about this strategy and how best you think can be done to this strategy. Okay, you can also join our free Telegram channel. The link is in the description box below. You can also follow me on Instagram to get updates of these new strategies and everything that's happening. So make sure you follow our socials, and that's where you also get a number where you can contact me on WhatsApp. So join our Telegram channel and follow me on Instagram. So I'm gonna start off by installing this strategy from scratch, because I know most of you might find it difficult to do that. So we're going to use 3 stochastic indicators, and those 3 stochastic indicators are going to give us an entry point and an exit point, right? So make sure you watch up to the end of this video so that you don't miss out on anything, and just comment down below the feedback about this strategy, or tag me on Instagram on your results, and I will be able to see the feedback. Okay, so let's install the strategy. I'm gonna go on indicators now. I'm just gonna do something that's a little bit unusual. I'm gonna start off by installing an RSI, a random RSI. I've done this because it's difficult to get the indicator window without installing the RSI first. You will only be able to install this first indicator window when you have installed an indicator that has to be in the indicator window. I hope I didn't confuse you guys, but what I really mean is, once I've installed this RSI, I now have a section which says indicator window. If you checked before, we only had the main window, which would mean that everything that would add would go to where we find these candlesticks. Everything we installed would go to where we find these candlesticks, not down there. Okay, so I'm just gonna start off installing the stochastics. So the first stochastic oscillator that we need has the following settings. We have this one, which has a period of 50, the first one, second of 3, and then the slowing of 5, and then price field is close. Method is simple. Levels, you need level 90 and level 10. So just make sure if you don't have those, just create them. And then colors, you can choose any colors of your choice. And I'm gonna click done. Now I have my red and yellow stochastic down there. I'm going to go back to my indicators and delete this relative strength index because I don't want it, right? And then I'll be left with the stochastic which I want. And then I'm going to create the second stochastic oscillator with the following settings. I'm going to change this number now to 32, and then everything else remains the same: 3, 5. Price field is close. Method is simple. Levels is 10 and 90. And then color, I'm just going to switch it up a little bit so that you can see the difference, right? And I'm going to click done. Now I have another stochastic down below. As you can see right here, it says stochastic 53 and 5, and then the next one says 32, 3 and 5, which means we now have 2 stochastic down there. And then the last stochastic that I actually need is, or has, the following settings. I'm gonna change this number to 15. Everything else remains the same. 3, 5, close, simple. Levels 90 again. Color, I'm just gonna switch it up, and then maybe black here, and then I'm gonna click done. So now we have all the indicators that we need for this strategy. I'm just gonna adjust my screen here. Can also do that. So now we have all the indicators that we need for this strategy to actually work, right? So now the questions now are, when do I buy and when do I sell? Of course, another thing that you have to take note of is the zoom level really does not matter. It doesn't change anything. Your zoom level doesn't change anything, right? For this strategy. So make sure you know that. I know most people usually have those questions. Okay, we're gonna start off with the sell, right? When do you sell? So you sell when all the stochastic lines gather at the top at level 90 here. We can see where I'm pointing. You sell when all the stochastics have gathered at the top at level 90 or anything above level 90. That's when you take your sell trade, right? So we're gonna start off by looking at this example or at this scenario. Here we have all the stochastics gathered at level 90, and then we can start to see that we sold after the stochastic had gathered at the top there. We started to see a downtrend happening, right? This strategy can be used in any time frame. It just depends with the type of trading that you want to do. Do you want to swing trade or you want to scalp? If you want to scalp, you're going to move to smaller time frames like the 5-minute time frame or the 50-minute time frame, the 15-minute time frame. And if you want to swing, of which I prefer you would swing or do intraday trading, you are going to use your 1-hour time frame. If you can use your 4-hour time frame, if you are that patient, that would be even better, because you're going to get stronger signals and stronger entry points, because you'll be following mostly the trend if you are swinging. But if you are scalping, you're going to be a little bit risky, but that's the point of scalping. Either way, it's fast money, easy come, easy go, right? But if you want to do some proper trading, that's why you see I'm in my 1-hour time frame right now on Euro USD, is because I usually prefer to swing. So for this scenario, for this sell scenario, you can see that you could have entered the sell right here, which is any point within this region, right? And then you could even hold for a couple of hours up to this point. This is probably more than 12 hours or even closer to 24 hours, which means you're doing intraday trading, right? You close within a day, right? So that's a sell scenario. Let's look at another sell scenario. Okay, we have a nice perfect entry here. All the indicators gathered at the top, all of them, can you see all of them? They've crossed level 90, which is different from this point where we had only 2, which would not be an entry point, right? So this would be an entry point and this wouldn't. And as you can see, it would sell nicely going all the way down. Again, if you're doing intraday trading, you can count even 24 candlesticks here to get your day, right? Let's look at another sell setup that you can find. So these sell setups almost appear daily, but are not as frequent as those that you would find in smaller time frames if you are scalping, right? Again, with a nice perfect entry here, and again we sold all the way down. So we can go on and on all currency pairs and search for these sell setups, and we would find them, right? But that's up to you guys to actually test it out. I'll just show you a few things, otherwise this video will be too long and I don't want to make it too long for you. So let's move on to when do you actually buy. And obviously you buy, it's the opposite. You buy when all the stochastics meet at the bottom at level 10, somewhere at this point. And today we had a nice setup here, this buy position. If you actually it happened yesterday on the 13th, on the 12th, depending on when you're watching this video, but somewhere around here could have taken your buy trade. This is almost a sniper entry. As you can see, the drawdown, you would not get much of a drawdown, and as you can see, this is live prices around this level right now, although it's not moving because I switched off my data so that you don't get notifications. But here's a nice perfect buy scenario, and as you can see, you went all the way up. This is about 1 2 3 5 6 7 and 9 10, about 18 hours of holding, and this is a lot of pips, guys. Trust me, this is a lot of pips. And then I want to show you what's not a buy, which is this. Can you see we don't have all the stochastics in or under level 10? And can you see the buy was a false buy that you would experience? It's a false buy, it's a false entry, it's not a correct entry. So make sure you guys grab perfect entries like these here. Zero drawdown or just a little, depending on when you entered. But can you see we bought all the way up? Okay, so okay, go on and on and on and on talking about these entries, but this video will be too long by then. Let's talk about your exit points. So the first exit point that you need maybe is your stop loss, depending on what type of a trader are you. But obviously when I take a trade, I look at when do I stop my loss. And the first stop loss that you can, the first type of stop loss that you can use is by saying I'm willing to lose a maximum of 10 pips, because this strategy cannot go beyond 10 pips in loss. So that's what you can do. The second is you can use the strategy in reverse to get your take profit level. So if you are going to say I'm going to buy when my stochastics meet at the bottom, it means when your stochastics are now at the top, you can exit. So you would say if one of my stochastic lines crosses my level 90, if I was in a buy, then I want to take my profit, something like here. So you'd buy at this point, put your stop loss 10 pips away, and then your take profit level would be the moment this line crosses the level 90, this stochastic crosses the level 90. They don't have to be all the lines to cross the level 90, just one line. If it crosses, then that's your take profit level. This is what I use. So I'm just going to show you guys what I actually use. You can actually devise your own take profit and stop loss levels depending on your risk reward ratios, right? Obviously, but I'm just going to show you what I actually use. So in this case, I get the maximum out of the momentum despite my risk reward ratios. Okay, so tell me guys what you think of this strategy. Is it good? Is it bad? Comment down below. Don't forget to like, don't forget to subscribe, and don't forget to join our free Telegram channel. The link is in the description box to get more updates at EDG. Until next time.